In this video, I'm going to walk you through the calculation for the net income attributable formula for a removal or recharacterization of an IRA or Roth IRA contribution. And I'm also going to show you a really easy worksheet so you don't have to go through any of this math, but I'm going to explain how it works anyways. But first, I'm going to show you some resources on our blog, theincrediblepenny.com. And this is the post, How to Fix the Excess Roth IRA Contributions, and a step-by-step guide. But this is also the same formula if you have an IRA excess contribution that you can walk through. And if we scroll down, we're gonna see the button here, download the worksheet, which I'll go through in just a second. But let's take a look at the formula first on this post with the net income attributable formula. And you can see the net income equals the contribution times the adjusted closing balance, which I'm going to explain what that is, minus the adjusted opening balance divided by the adjusted opening balance. But what I do want to point out before we go through the worksheet and the easy calculation is that there are two parts to the amounts being removed from the recharacterized or the removal of your contributions, and that is the excess contributions versus the net income attributable. So the net income attributable is the gains associated with your excess contribution, and it's important to understand that they're different. The excess is what you contributed or over-contributed into the IRA or Roth IRA, and the net income attributable are the gains associated with the excess. Now, you're going to end up taking out both, but you have to understand there is a difference to both of those numbers. Now, let's go ahead and pull it up on the screen to go through this worksheet. So just click on that button and download the worksheet, and you can walk right through it. I'll leave a link in the description at the bottom. Let me go ahead and zoom in here and scroll down to the formula. And again, you can see it right up here. The net income attributable formula, it's written differently. It's the exact same formula. So it's net income attributable equals the excess contributions times the total earnings divided by the adjusted opening balance. So what do we need to do first? We need to figure out what our excess contribution amount was. Now, I'm just going through the net income attributable formula. So you need to figure out based on your income, and I have other videos and other resources. Check my channel and the link in the description at the bottom, but you need to figure out how much your excess was. Let's say that we contributed $500 too much to our IRA. The balance as of the date of withdrawal, so now we need to jump to number one, balance as the date of withdrawal. Let's say that balance on the date you're removing it was $8,000. And I'm just making these numbers up as we go, just so you can see how this all works. Number two, amount of any withdrawals. It's probably rare that you had a withdrawal from any IRA or this IRA, and it is only the IRA that has the excess contribution that you're going to be working with. It doesn't matter if you have multiple IRAs, it's only the one with the excess. Line three, account balance immediately before the excess was made. So this is the day before, the closing price on the day before you made your excess contribution. So if you made it really early in the year, let's say January 15th, you're gonna look to January 14th. Let's say you did it in November 15th, then it's gonna be November 14th, and you're gonna look at the closing price on that date, and you're gonna add all the money up in the entire account. That is the account balance immediately before the excess was made. Now, it is going to be your last contribution. So let's say that I was making contributions throughout the course of the year. Let's say you made $500 per month and you only had one excess contribution, then that would be the one made in December. It is the last contribution in the tax year. That is your excess contribution. If you had two contributions in that same example, you would go November, December. If it was three, you would go October, November, December. You're never going to take out the first one and leave the last one in there. That's how the formula works. Line three, account balance immediately before the excess was made. Let's say that was $4,000. And the amount of the excess contribution and all subsequent contributions made before the excess removal. Just so you know, subsequent means after. So what this means is if you made any contributions, including rollover contributions into this account, that would go right here, but we're just going to go ahead and put $500. Why? Because it says the amount of the excess contribution, which was $500, but we didn't make any contributions after that time. So we're just gonna put $500 in there. Let's say you're fixing this in January and you made a January contribution right before you went to go fix it, you would include it because you're doing this right before the excess removal, even though any additional contributions wouldn't get added to the excess contribution. Any time deposits like CD surrenders or annuity surrenders, so we're going to say 0. It's unlikely that you're going to have it, but if you do, that's what it's referring to. Now we're going to scroll down and see how it plugs in the formula, the numbers into the formula. We have our 500 excess contribution, our 3,500 in total earnings, and then we have our adjusted opening balance. That adjusted opening balance simply took all contributions and all subsequent contributions and added it to the opening balance. That's why it's called the adjusted opening balance, and it explains it right here. Now, our net income attributable is $388.89, means that we need to add our 500 to our 388.89, and we get a total amount to be withdrawn of $888.89. If we quickly go back to the blog post, if you have more questions, I do a full walkthrough with more explanations. In addition, I also have several videos on this page that you can watch for more examples on the net income attributable and the excess contributions and how to remove them. And that is the walkthrough with net income attributable. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.